Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. I'm regularly asked, hey Daniel, can you share more about the potential multi-baggers that you're finding or your personal investment portfolio? The truth is I save most of that exclusively for my Journey subscribers, where each month I call out my full portfolio, and by the end of each month I call out a potential multi-bagger. Just this past month I called out a medical device company that I think has the potential to go up by 600% plus. So, but that said, all that considered, I am in the mood for the holiday spirit, and the reality is Wall Street might just be offering a holiday bargain right now in Novocure stock. It's a stock that I own. NVCR is the ticker. It's already gone up significantly for me when I first called it out here on YouTube. That said, I still think it has the potential to grow by several 100%, maybe even gets acquired at some point in the future, just given what they're tapping into. So if this video is going to largely be a quick recap of what do I think of the opportunity in Novocure and why do I think the stock is down so significantly, presenting that type of opportunity. So let's dive right into understanding. Once again, full disclosure, this is not financial advice, and at the time of this video publication, I did own stock in Novocure. So, looking at this first, Novocure was one of my first videos here on YouTube. I highly recommend you don't check it out, just given that the quality production was so lousy. That said, I'm hoping to improve things around here. I called it out around $60 per share. Over the next year, it increased by nearly 4x. While I had bought a teeny position along the way, I sold the majority of my position for a nice profit, around 140% return. I still own a tracker position, however. Novocure NVCR is a novel platform treatment for cancer. The basis of their technology is around tumor treating fields, where a patient will wear a device that generates mild electrical fields that pulse through their skin. So they wear this device that creates this electrical field that interrupts cancer cells' ability to divide. It interrupts cancer's ability to spread very quickly. This isn't some pie-in-the-sky treatment as well. This isn't some theoretical thing that hasn't been proven out. It has literally helped thousands of patients with glioblastoma, a particularly lethal cancer, which improves their odds of survival using this treatment. The treatment is usually paired with the existing course of action, such as chemotherapy or immunotherapy, to improve the outcomes. Part of the reason I own Novocure is because it's not only unrivaled, but it also has significant optionality to become a new platform, not just a new treatment, a new platform for cancer treatment. They're currently running several trials applying their tumor treating fields for various cancers around the world. For example, just a few weeks ago in September, they announced a clinical trial collaboration with Roche to evaluate their technology as a novel treatment for pancreatic cancer. When I see, a smaller company teaming up with a much larger company, it makes me start thinking, oh, okay, this is a good data point in terms of considering the odds of potential takeout, potentially getting acquired at some point in the future. When you have bigger, the bigger elephants noticing you, it does increase those odds, in my opinion. They also have an ongoing trial for ovarian cancer with final data expected in 2023, an ongoing trial for non-small cell lung cancer with final data in 2022, an ongoing trial for gastric cancer, once again, data in 2022, and several other different types of cancers, brain metastases, and others. So they've got a lot of coals in the fire here. And the reality is that Novocure is just scratching the surface today, and their market potential, at least what management thinks, is easily 10 to 20x bigger. And the way to think about that is not only are you tackling potentially more cancers, but you're also tackling cancers with bigger patient populations than what you have with glioblastoma. So it could be literally multiples from where they are, and you're going to see a lot of data points arguably in the next 12 to 24 months that could potentially point favorably. They've also, so you've got this huge optionality. You've got something like $900 million in cash on their balance sheet. That's gross cash. That's not net of their debt. But they do have, an existing product market fit approved for glioblastoma that makes them a cash cow now. So the risk of shareholder dilution is a lot lower. This is in contrast to, let's say, a biotech company where it's just about, hey, we're burning through just a ton of cash. So that is part of the reason why I originally got excited here, was seeing, hey, this business could potentially, just run on their cash flows and explore all this optionality. That's what got me really excited. So given all this potential excitement, why is the stock down 60% in just the last few months? A few thoughts here. One, the valuation did get pretty rich just for their existing base of business, not really giving a lot of credit to future. And their growth rate did decelerate significantly from around 40% last year to only 1% in the most recent quarter. So that is some cold water in the face that it does shock a lot of investors, and that's part of the reason why the stock's down so significantly. This 1% growth has investors worried that their glioblastoma business is fully saturated. This is particularly myopic, in my opinion, given that one, management claims that Novocure is only 30 to 40% penetrated in their existing markets. That's a really key point to consider, given that means they could continue growing without the additional optionality. This is just their proven market so far with glioblastoma. Two, it gives little credit to future product launches. Three, last year's sales included $8 million in catch-up payments of previously denied Medicare claims versus zero this year. So that gives about an implied 7% revenue growth, adjusted for that catch-up payment. And general activity is slower because of COVID, where management's called out how brain surgery, for example, is down about 20%. And it's just generally tougher to get sales reps in front of physicians and patients. While the stock price could fall a lot further, for example, if Novocure doesn't show significant progress in becoming a new platform for cancer treatments, management seems confident. And just this past week, the CEO bought over $500,000 of stock around current prices. So it does strike me as like, okay, you're starting to see some real insider buying here around current prices, with prices ranging from, like $103 to $97. So that does strike me as interesting. That was just last week. And so I'm looking at this and I'm saying, this is pretty interesting. So if you want to follow the details of my personal journey, once again, go to unrivaledinvesting.com. I have weekly updates for my Journey subscribers. So for example, if at some price I say, hey, now I want to dramatically increase Novocure, Journey subscribers will hear about it. We also have on Discord, where I'm interacting on a daily basis. There's a lot of thoughtful folks on there asking and talking about, really interesting companies and sharing their thoughts. And so that's on Discord, where it's just generally a community, of folks looking to learn, myself included. And so if you want to, follow along with the journey, once again, go to unrivaledinvesting.com. And I hope this video, capturing, hopefully the holiday spirit and maybe even potentially a holiday bargain from Wall Street is helpful for you. And if you enjoyed this video, please make a point of hitting that subscribe button, hit that thumbs up. Thanks so much for tuning in.